right, so quickly want to go over some markets. Let's just go over Amazon. So what happened here is first we'll just take a look at SPY and then Amazon right on top. So SPY where it says SPY, Amazon where it says Amazon. All right. So what happened was, first of all, it's very, very important that I show this. Yesterday when the market was going down, there was a wave up here. Just looking at that wave alone, you can't tell what the hell is going on. It might be up thrust, might be this, that, but this was the breakout bar, and it was a change of behavior indicated by the heavy volume on the indicator below. After that, it went up, and now today in the morning is when it got interesting. I was looking for it to take out this low, but it didn't take out the low, so I don't know what happened. This low, I thought it was going to take it out and break and all that. Let me stop. Okay, let's go here. So after that, so they protected the low. I don't know why. And then rally and rally. So this right here is telling you the market is going up. Why? Because you have heavy. First of all, you had heavy downside pressure, but it reversed and went up. And then finally did this, pull back some here, and rally. Now, I don't know if I have it here. Yeah, right there. So this is why the indications are so important and so. So the market goes up here. There's excessive volume in SPY. So this is okay. You know, something might be off. But here in the final wave, this is where right here, pulse of the market, basically the activity shot up. And it didn't get caught in other ways, because if this was more than 5 or 6 or whatever, it would have printed. But it's still high. And when it went there, Amazon was doing what? It was breaking through its resistance. This clear breakout through resistance. Then what happened was, as the market went down, it basically confirmed that this is a climax. How do you know? If anytime you have a climactic wave that gets taken out, done deal. All right, done deal. So it got taken out. Once it got taken out, there's no question that shorts are easy, because all that volume is trapped up there. So they're not going to let those guys out. The only way they get taken, they're going to let them out, is if they're going to absorb and there's much higher prices to come. They're not going to let them out unless the market is expected to go much higher. Okay, so then you have the selling wave that came, and this interested me because of a couple of reasons. Once, it was after the climax. It's not that visible, the climax, but here it was. But you had this heavy selling wave right here. Okay, this was your change of behavior. So when it did that, I'm thinking, okay, first thing you have to do is understand, was there a climax? Yes, there was, but it's not heavily visible. All right, it would have been better if it was much more volume, but what do you want to do? Anyway, so this wave came, change of behavior. This was the bar that broke the trends back. Right there. Right there is the bar that broke the trends back. Okay. All right. So just this far, what are the lessons here? The first lesson is, sometimes you have high volume climax, but sometimes you just have more volume, but it's not exceptional. So what do you do in that case? How do you know that's a climax? Because it's not the heaviest volume in the trend, but it's still a good amount. It might be more than, for example, in this case, more than the prior 4 up waves. So you're like thinking, okay, is this terminating? Is this ending? I don't know. What do you do? Wait for the low to be taken. So here, the low was taken. It broke. See that? It's very clear. So because you know that after climax, what happens? A change of behavior. Why? Because it confirms that they're selling on the way up, and now they're selling on the way down. Why do you want to sell on the way up? You get the best high prices, so you sell on the way up. When you can't sell anymore because there's no more buyers, then you're going to sell on the way down, get the second best high prices, right? So they sold on the way up, then sold on the way down. So you're in a very precarious position because now you have that selling wave, you have a breakdown bar right there. So this is looking good. Okay, you have that first tap. This got me a little concerned, but it turned out it was effort reward. You know, you can't really always figure it out, but because this heavy volume, they could have pulled back and could have taken out the high. It's very heavy. Like there's a lot of volume here. But in any case, it does that, and it comes back, and it only tests. And eventually, the second and third tests show much less volume, less than 1/3. So, as all of that's going on, you can ask yourself, all right, which markets are, if the market's selling off, you go into the stocks and say which ones do I want to sell. So here you go. You have Amazon. Beautiful, beautiful action right here. Why? Because the market had a climax. The low here of the climax wave was taken. Bang. And you have heavy pressure here. And it is rejecting the breakout. Rejecting the breakout. It goes above resistance and rejects. So now the question is, all right, so from a turning point perspective, what's important here? What's important here is you have climactic action followed by a change of behavior. So put that in your skull that when a market's supposed to turn, it typically has at least these two behaviors, or at least one, which is your change of behavior. Because instead of the climax, you might have either one of the shortening of the thrust. So you don't know which one's going to present itself. As I explained before, markets have a tendency to end on 3 types of behavior on their left-hand side. 1 is the climax, 2 is effort reward, and 3 is your shortening of the the lack of demand or lack of supply. All right, which obviously has shortening of the thrust and very low volume that's decreasing. Okay, so over here you have the first case, which is your climax and your change of behavior. You have going above and then breaking below. Very heavy volume, biggest volume in 35 waves. 35 waves. Selling pressure in these bars. It's gonna test these bars, and that's it. No fucking think too hard, So now the first pullback in Amazon. All right, okay, taps. Second pullback, third pullback. Why do I like this? You see this right here? This is very, very important. Now, when you see a break above these two highs, what are you thinking? You're thinking it's a breakout. That is incorrect. Because a breakout can be a climax. And this is what most courses or Wyckoffean teachers, they will tell you, right? They will not tell you this because they don't know it. They will not tell you that a breakout can be a climax. But it's very true that a breakout can be a climax in that it can be a false breakout and it can terminate the move. See plenty of charts, you will see that the breakout happens on heavy price volume action, and guess what? That's the end of the move. So how do you know? Well, first, this has that breakout appearance, but you don't know if it's a breakout or a climax. I know it because of the following bars. The following bars have clustered closes. They represent a lack of follow-through. Again, a lack of follow-through. There is no follow-through here in 1, 2, 3, 4 bars. You can't even read the print in them. So what does that mean? That means this breakout is actually a minor climax followed by a lack of follow-through. And I explained before many times, I told you about that gun formation. It looks like a gun right there. when it has like a thrust and then all the sideways bars like that, this is preparation. That's what it is. It's preparation. Anyway, all of that is in the context of heavy selling in the background against a selling in the bars and a selling wave, and very important, as you all should know, against the resistance. Right? You have a level. Right? And that level is not a bullshit level. It is a meaningful level. We'll talk about that later because I've seen a lot of levels being drawn on folks that talk about levels and zones and this and that. But there's obviously some levels that are extremely high probability and others that are not. So how do you distinguish which ones to use? And also it matters in market context. I mean, the levels will keep on breaking. If you have higher order, you have buyers up there, they'll just keep breaking. They'll just keep on breaking. So even the context will determine whether resistance is really resistance and support is really support, or is it meant to be broken because the market trend and context is in a state of momentum, markup or markdown. So no level will matter. It's going to break right through all of them. Anyway, so we go over here, you break, and then it comes down. So this is your climax. I've explained this 100 times. Climax, and this is your change of behavior. Why? They always hang out together. They always hang out together. All right, either you're going to have a climax on the left-hand side, or you're going to have a, what is the other one? I keep forgetting, effort reward, or you're going to have a lack of demand, lack of supply. Okay, so you have that, boom, boom, at the resistance and rejects. Now you have this shit over here, goes right into that area, boom, that's a fake breakout. Also, my take on it is the same as a climax. And you know what? When I forget if Wyckoff explained it that way, I don't remember, but he did say something about it, I don't remember. Anyway, over here is your climax, then you have shit in the middle, and you have a break, and you have a puke fest. Down, 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 down. Where should you get out? Right here. Once you see this, you should get out. Why? Because it's a very strong selling wave that overshoots bigger than the rest. Why not get out? It's climax, right? Here, if you're long here, these, for sure, you should start, there's no point, right, to get in anymore, or because it's climaxing. Climaxing is not a good idea. Why are you going to stay in? If it goes to a level, or it starts to have evidences of climaxing, these are clear indications to get out. And obviously the third one is a little trickier, but it's basically shortening of the thrust. If the market shows shortening of the thrust, there's going to be at least a hard pullback, and you're going to have to endure that. If it has shortening of thrust with heavy volume, meaning there's some type of heavy effort, get out. If there's climax, get out. If it goes to a key support or resistance level, get out. That's how you get out. And it's not my word. What Wyckoff said was, if you have a trend and then you have an exceptionally strong wave, get out. So yeah, this here is also very telling. This one here, this green bar. If I see this, this is like an early indication that you don't want to be in here. Why? Is the biggest thrust in 50 bars. That means get out. Right? So that's all I got. So what are the key lessons here? Whenever you're looking for a turning point, keep the left-hand side in mind. What is the left-hand side? It is climax, shortening of thrust, and effort. What is the delimiter? The change of behavior. What is the right-hand side? Typically what's known as a feather's weight, or a lack of demand or lack of supply. If it's bearish, you're looking for a lack of demand. If it's bullish, you're looking for a lack of supply. Do we have that here? We have it from a perspective of price. Where is it? This is 60 cents, this is 50 cents, this is 60 cents, right? 50 cents wave, 60 cents wave. What are the prior waves here? $1.50, $1.70, $1.90, $1.30, $1.50. What is that telling you about the waves? they're smaller. That is telling you that this represents your lack of demand, which can be identified typically in three ways. One of them will give you the clue. It's either going to be through price, which I just showed you, where you have 50 cents wave, right? 50 cents wave bigger than, smaller than all of them. What is the second way? Through time. Time will show you 1 bar waves, one, maybe two. So if you have a 5-minute chart, the wave lasts 5 minutes, maybe 10. All right. So through time and through volume, everybody knows that it's going to be low volume. But many times you will not get it through volume, you'll get it through price, or you'll get it through time. And you have to know that. What is the other thing you expect on the pullback after change of behavior? What do you expect on a pullback after change of behavior besides the lack of demand here is a minor climax. What will a minor climax look like? It will be a bar with a lot of volume or a lot of activity, basically an exhaustion bar. How do you detect it? Well, there's a couple of ways, but intraday, it's a pain in the you know what, because volume intraday is very shady, so you have to figure out another way to do it, and there is a way. And the other way, the climax may also look like a breakout, like over here. This is ending action, folks. This is not a breakout. This looks like a breakout, but that's deceiving. It's not a breakout. This is a climax. What kind of climax? A minor climax. What is a minor climax? It ends a pullback. The purpose of a minor climax is to end a pullback. The purpose of a major climax is to end a trend. Okay, minor climax can also end a rally too, but whatever. That ends the waves. All right. Thank you. Bye-bye.